LiteFinance, the world of financial freedom.
Hello, it's Monday, 22nd day of May, and it is time to start the market forecast. We have a couple key macro data publications this week for almost every asset, so it promises it to be a very good week for traders. So without further ado, let's begin with the calendar. Today, as usual, nothing major is happening. Canada has holidays. So we move on to Tuesday, where we will get PMI data from Japan, UK, Eurozone and the US. So we will get a glimpse of what might happen in those economies in the near future, since PMI indicators are of course a leading type of gauge. Okay, next is Wednesday, where we start early with the interest rate decision from New Zealand, then inflation data from the UK, crude oil inventories and most importantly, FOMC meeting minutes. On Thursday, we will receive a preliminary US GDP figures, and on Friday, inflation data from Tokyo agglomeration, and then, most importantly, PCE inflation from the US. So as you can see, a lot will be happening during this week, which in turn should cause some bigger moves, which eventually should create for us great opportunities. Okay, now let's move on to some deeper analysis for Euro-USD, based on which we will make a trading plan for this week. So, the growth of Euro-USD volatility looks logical. It was caused by the inappropriate behavior of the Republicans, who refused to negotiate a debt ceiling, while President Biden said that it was a time for opponents to abstain from extreme viewpoints. The main currency pair rebounded from the important support at 107.76 and returned to 108 to 185. It was called the balance zone around which consolidation would form. So statements by opponents who believe in a ceiling deal and hawkish statements by FOMC members have dropped Euro-USD. However, the neutral rhetoric of central bank officials and Joe Biden's angry message to the Republicans at the G7 summit in Japan brought the euro back to life. The US dollar doesn't act as a safe haven currency. In May, its rate is driven by treasury yields and the possibility of a 2023 dovish reversal in the futures market. So, treasury rates have risen for 5 consecutive days, hoping that the default and recession can be avoided, and the Fed can raise borrowing costs to 5.5% in June. However, the situation changed in the week ended May 19th, allowing Euro-USD to reach the bottom. According to Jerome Powell, the Fed faces uncertainty about the delayed effects of monetary tightening and the banking crisis. Central bank officials can afford to evaluate the data before deciding whether to raise rates. Investors interpreted this message as a hint of a pause in June. Minneapolis Fed President Neil Kashkari also mentioned it by saying that there is a difference between a pause and an end of a cycle. So the effects of the banking crisis are unclear, while inflation is still very high. So according to Bloomberg forecasts, the PCE index, which is the Fed's preferred inflation indicator, rose by 4.6 year-on-year and 0.3% month-on-month in April. Thus, it's too early for the Fed to rest on its laurels. Thus, Euro-USD is supported by concerns about the debt ceiling and pause expectations at the June FOMC meeting. So about 71% of investors surveyed by a Bank of America believe that the problem with the borrowing limit will not be resolved until June 1st, although most of them hope that a default can be avoided, of course. At the same time, Goldman Sachs claims that the government will run out of money not on June 1st, but a week later. So as soon as there is good news about the talks between Democrats and Republicans and Fed officials start discussing a rate hike in June, the US dollar strengthens. And so, in the context of uncertainty around the debt ceiling and monetary policy, the chances of Euro-USD consolidation in the range of 107.6-109 increase. Therefore, stick to sales strategies on the rise. Okay, and that will be all from my side. Thank you guys for watching, and I'll see you in the next video.